Time now for an in-depth look at the global markets this afternoon, and for that I'm joined by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Sorry about that, Professor Yang, and thank you for coming on today.
Happy to be here.
Well, stock markets on Wall Street were up on Friday. In part, it seems on hopes for a new treatment for the coronavirus. In Korea, though, the KOSPI turned sharply lower this afternoon. What's the story in the markets as we start the week?
Okay, well, if you look at it internationally first, then Asian markets and American markets have been doing fairly well, though not spectacularly. If you look at the gains that they made over the past few weeks, they recovered somewhere between 1/3 to 1/2 of what it lost because of the coronavirus. But last week, the trading volume, especially in the U.S., seemed to be very low. Europe, they've been not gaining in the market like Asia or United States, and they have been recovering at a much slower rate, the stock market. That's probably because the countries of France, Spain, and Italy and United Kingdom have been hit so hard by the coronavirus. But the reason that we're going back to relative, I call it pseudo-normality because we're not completely back to normal yet. We're pretending to be normal, is that the Fed, the central banks of these countries and the government of these countries have done a lot to take the risk from the market by providing a lot of liquidity, providing a lot of loans, providing a lot of loan guarantees. So a lot of the danger, obviously not completely, but a lot of the danger that came from the coronavirus and the uncertainty have been taken by the government rather than the investors. So I think they look at it as a chance of making some money in the stock market as long as they keep either the investment very, very short so that they can move their investment in and out in a matter of days, or very, very long since they know that the market is underpriced, but they just don't know when it'll go back to more reasonable level of prices.
Right. Well, one factor last week, we saw the Chinese economy shrink for the first time on record, at least since 1976. This was the first quarter. That's a concern for Korea, which depends a great deal on China in terms of exports. So what do you make of this contraction in China?
Okay, well, contraction, basically number up to March, so it already happened, and that has been reflected in Korea's export figures as well. If you look at the first quarter, Korean exports to China, it fell by 8.1%, so that's slightly more than China's fall in the GDP. But Korean trade overall, exports overall have not done as badly because Korean exports of semiconductors has done better than what we expected it to do, partially because there's somewhat more global demand for semiconductors because, well, everybody's stuck at home, so they're using their computers or smartphones for entertainment or communication, and also partially because a lot of semiconductor users seem to be hoarding the supply of semiconductors. They're afraid that perhaps the supply will be unstable in the second half of the year. But still, we are very worried about the trade situation because, well, WTO estimates that global trade will fall by 16% to 32% this year. And previously, when we had a slowdown in global trade growth or falling global trade volume, Korea's exports went down even further than those global numbers warranted. So if you just take these numbers at a face value, that means exports may fall more than 16 to 32%. And since Korea's GDP is about 43% of Korea's GDP are exports, that could mean a major hit on Korean GDP. Now, it probably won't be as far as a straight calculation of these numbers would indicate because the domestic demand would probably pick up some of the shortfall, but still, it's a frightening number that we should begin to prepare for.
Well, speaking of Korea's GDP, we'll see an estimate this week from the Bank of Korea on GDP growth for the first quarter. That and what else should we be watching for this week?
Okay, well, as far as the first quarter growth GDP numbers are concerned, Korea does have a fairly good chance of making a positive growth rate. I personally would be surprised if we did have a positive rate, but it is possible because Korea did not get hit as hard as some of the other countries, but still, the GDP numbers are probably the most important numbers that we should look at. Other numbers that we could look at is the financial institutions lending behavior survey. So much of what how hard Korea will be hit by the coronavirus will depend on how willingly are financial institutions going to make loans and how badly will the companies be able to pay back or not pay back their loans. So this report would be of interest. And then Bank of Korea is also releasing foreign exchange banks' foreign currency transaction status report. We need to keep an eye on whether the foreign currency is fleeing from Korea too quickly. Otherwise, we do run into a risk of currency crisis, though right now I place that risk at a very low percentage. And then foreign statistics, always the U.S. Manufacturing Purchases Index is an indication of how well or how badly U.S. manufacturing is going to do. And of course, as always, the U.S. unemployment insurance filing numbers, though at this point, we're just wondering whether it'll hit a historical low or historically high, or whether it'll plateau off. If it does plateau off, that may mean that the recession from coronavirus may not be as bad as people fear, but right now the odds of that seems fairly low.
All right, Professor Yang, we'll have to check back in with you on all of that. Thanks so much for coming on today.
Thank you.